Hello traders, hope you are all doing great. As an option trader, you know well about Bharat bond, right? So you invest in Bharat bond, you go for collateral, and you make interest in Bharat bond also, and you make profit in trading also, right? So as an option seller, you are very familiar about Bharat bond. Now we are not going to talk about Bharat bond in this video. We are going to talk about a very much safer and a very good instrument which is going to give returns more than Bharat bond. So how much is Bharat bond giving? Maybe 7.5% or maybe 7.65% annualized return. So we are going to talk about an instrument which is going to give even more than maybe 10% or 10.5%, right? So in this video we will briefly talk about such instrument, and you have to understand Bharat bond has a risk element attached to that. But what I'm going to say is instrument which has no risk at all, 100% guarantee, right? So we are going to talk briefly about GSEC or T-bills, GSEC and T-bills. Okay, what is GSEC? Government of India securities or Government of India bonds. Okay, so there are Government of India is issuing bonds to institutions, retailers, and even banks. Now previously what happened is this security was only accessible to institutions and banking, but since last 2 or 3 years, Government of India, RBI along with NSE has allowed retail participants to also participate in this auction, so that retail investors also can invest in Government of India bond. Okay, now you have to understand what is the difference between Bharat bond and Government of India bond. See, Bharat bond is a institution which lends money to AAA rated companies, AAA rated public companies. Let us say ONGC. ONGC is a public company, Government of India company. Or let us say National Highway Authority of India, it is a Government of India company. Or let us say some other company, okay, maybe Airport Authority of India, it is a government company. So Bharat bond lends to AAA rated companies in the public sector. It doesn't lend money to private companies. It doesn't lend money to Reliance. It doesn't lend money to Adani, or it doesn't lend money to Airtel. It lends only money to public sector companies, right? Now there is a chance of this public sector company going default. It can be bankrupt, right? So there are possibilities. There is a risk element attached to Bharat bond. But this Government of India is, let us say for example, or let me give you a perspective. Let us say Government of India wants some money, okay. Now let us say one financial year, the total income for Government of India is 1 lakh crore, but it is having a expenditure of 1,30,000 crores. Okay, so this 30 lakh crores, 30 lakh crore, how it will manage? It will go to RBI, because Government of India wants to build infrastructure to its citizen. It wants to build hospital. It wants to build roads. It wants to build bridges, so on and so forth. So in order to fill this gap, what they do go is they go to RBI and they tell, listen, I want some money and I need you to arrange some money. So RBI, what does it do is it issues bond. It issues bond to bankers, institutions, and people like us, retailers, so that they can get that money and give to Government of India. Now you tell me, can Government of India default? There is no way Government of India can default, right? In one way or another, it will somehow give you your money. So your money is safe, 100% safe. There is no way of defaulting. Government of India will never ever default. So that case, if you see in that perspective, your money is 100% safe. Now ONGC can default, right? Hypothetically, I am talking, ONGC can default, National Highway Authority of India can default, or Airport Authority of India can default. Any public listed company can default, but Government of India cannot default, right? That is a very, very serious issue. Maybe we have to go to war on Okay, we don't have to talk about that. So you have to see that government of India can never ever default. So you are lending your money to government of India, and government of India is paying you interest for what it have, for the money which you have given to them. As simple as that. Okay, now the next question will ask how you will get collateral. Now you have to understand Bharat bond is a non-cash component, which means if you go for collateral, if you have a overnight position, F&O overnight position, there is a norm that you have to have 50% of your overnight position as cash component and non-cash component. If you don't have, your broker may charge you interest on debit balance. Okay, I have put a separate video about that. Maybe I will leave the link for that in this video. Okay, so you have to understand Bharat bond is a non-cash component, and if your broker is going to charge you interest on debit balance. But government of India bond is a cash component, which means no matter if you carry overnight position or not, even if you carry overnight position, your broker is not going to charge you any interest. So this is the main difference between government of India bond and Bharat bond. Now, to be even more specific, this video is going to be little lengthy and I will tell you in detail, so make sure you stream this video properly. This government of India bond, now you have understood what is the difference between Bharat bond and government of India bond. Okay, now the government of India bond is even it has two other different types. Government of India bond, under that there are two types of bond. One is T-bill or treasury bills, and the second one is called GSEC or government securities. So what is the difference between T-bill and treasury bill and GSEC? Now treasury bill is a bond issued by same government of India but matures less than 1 year. Let us say there are three types of T-bills. That is 91 days T-bill, then 182 days T-bill, then there is 365 days T-bill. So whenever, let's say you have applied for a T-bill, let's say you have applied for a 91 days T-bill. Okay, now what will happen is, let us say they are issuing for 100 rupees. You are going to get discounted price. Maybe let's say 100 rupees T-bill you will get for maybe 96 rupees or 95 rupees or 97 rupees. Okay, so there is no interest in this, but you will get at a discounted value, or they will say it as a PAR. Okay, so you are going to get a 100 rupees bill for 97. So it is as good as buying a stock for 97 rupees and selling this for 100 rupees. So you make 3 rupees profit, right? So these are called T-bills. There are 91 days T-bill, 182 days T-bill, and maybe around 365 days T-bill also. So the thing is, T-bills, treasury bills are those bonds which expire or mature less than 1 year, 1 year or less than 1 year. GSEC or government security bonds are instruments which expires more than 1 year. There are bonds which expire in 10 years, 20 years, 30 years, 40 years. We'll see in detail about those bonds in this video. Okay. Now, let us say you are buying a bond for applying for a bond which has a annualized interest of 10%. Now how you will get the interest rate, or how you are going to get the interest in your bank account, and so on and so forth. Let's say you are applying for a bond which is yielding a 9% interest per annual. Okay, so what they will do is, once you apply for this instrument and once it is allocated to you, every semi-annually you will get a interest in your bank account. Okay, so let's say for example, how much, maybe 10 lakhs you have bought a bond. Okay, 8%, let's say assume 8% interest. So every semi-annually you will get maybe 4,000 in your account. So at the end of the year, if you calculate, for the first year you will get semi-annually whatever 10 lakh interest you will get in your account. Then after 6 months, at the last of 6 months, you will get another interest debited to your account or credited to your account. So every year twice the interest is given to your account, and at the end of the maturity the whole sum 10 lakhs will be back to your account. So you are earning interest here, and at the same time your money is also coming back, right? Now this is the GSEC part, government, this is the difference between T-bill and government bond. Now, once you have allocated, now you have to pledge this bond. How do you pledge? No problem. I will show you a very simple thing. Let us say, for example, if you want to, let us say you are having account in Zerodha, okay? Now, this is the government security which is having non-cash component. I'm sure if you are if you are a trader in Zerodha, you can pledge your bonds, or you can pledge your mutual fund, or you can pledge your shares. And these are the things. See here, this one is giving a yield of 9.15%, right? So assume if you have deposited 10 lakh, you have bought bond for 10 lakh, 9% is how much? Maybe around per year you will get around maybe 90 or 95,000, right? Per year I'm talking. So first half year you will get 45,000 in your account, second half you will get 45,000 in your account, right? So this is how you can buy Bharat bond. I will talk about the buying part in few minutes. And once you get the Bharat bond, once you are allocated with the Bharat bond, not Bharat bond, Government of India Securities, GSEC, you can go to your broker and they can pledge your government GSEC for collateral. This is a cash component. It is not a cash component, non-cash component. Bharat bond is a non-cash component, but GSEC is a non-cash component. So your broker cannot, I'm saying it again, your broker cannot charge you interest on debit balance. So this is the main difference between Bharat bond and GSEC. It is more safer than Bharat bond. It is more liquid. I'll talk about that also, and many things. Okay. Now, how do you buy Bharat bond? I am always thinking about Bharat bond. How do you buy GSEC? Let us say, this is a very tricky part. If you want to buy GSEC, what you have to do is, if you have to buy a GSEC, what you have to do is every week you have to apply for every week RBI is conducting auctions in their website, or if you are, you can access your broker, you can contact your broker, and they have application like, let's say for example, Zerodha coin is having a platform, coin platform is having a facility where you can apply for Government of India Securities, and if it is allocated, it will reflect in your Demat account. But the thing here is, what you have to do is, let us assume it is like applying for an IPO, right? Let us say you, for example, Paytm IPO or Zomato IPO, where people have lost so much money. Like that, you have to apply for a GSEC also. If you are allocated, you will see it in your Demat account, and interest will be paid to your bank account, which is linked with the Demat account, right? If you are not getting this week, maybe next week also you can apply for the same. You can keep on applying until you get the maturity, you get the allotment. So this is the process. Unlike Bharat bond, you cannot buy it in this secondary market, and so you can sell it in secondary market. Now you have applied for a GSEC, and you have been allocated some lots, okay? Now if you want to, let us say you have applied for a GSEC which is maturing at 2030, right? More than 8 years. Now immediately you want to liquidate. You have some urgent requirements, you want to liquidate this GSEC, means All you have to do is you can do it in a secondary market, like selling a stock in the secondary market. As simple as that, right? So I hope I have summarized everything about the GSEC. Bharat bond is a good instrument, but also GSEC, government securities, is also a good instrument to invest. So if you want to invest, rather than going for Bharat bond, you can go for Government of India securities, and you can have all the things in favor of you. Like if you see here, Reserve Bank of India, they have issued 9.23% and all. 2013, they have issued a Government of India securities which is yielding an interest of 9.23%, which will expire on 2043, and these are all listed in this NSE. So you don't have to worry about this thing. Every semi-annually your interest will be credited to your account. So this is one of the most safest thing to invest in. Invest your money or park your money in Government of India securities, so that you benefit from these things. So I hope I have summarized everything. If you have any doubts, let me know on the comment section below. Thank you for watching. Take care. Bye.